Okay, now we are recording everything, and I'll try to not try. I'll definitely share everyone this recording with everyone. So let's start with our class. Well, few of the charts I have already prepared. Few charts I have traded upon, which I shared in my class, which I shared in my Telegram channel also, and with my clients also, which I have traded. Okay, few things which I would like to discuss. About technical analysis to with the friends who are new to technical analysis or who want a kind of uh, refresher on technical analysis. First thing is rationale of technical analysis. What is technical analysis and what is its rationale? Technical analysis is nothing. In technical analysis, what we do is that we try to analyze the trend, the price trend. Okay, there are three type of trends. Say for example, this is an uptrend. See this, prices are moving. Okay, this is 28th of September 2017. Okay, prices make a high till 18th of December 2017. They again make a low of 9,800 level on 26th of October 2017. Again make a lower high. This is one high, this is a lower high. Make a low, okay, on 4th of December 2017. Again make a relatively lower high as compared to this one as at 1038. Make a bit of higher low. Okay, this was 99. This price is what, 992. This price is 992.50, almost the same price. Again make a higher high of all the previous highs, and then this moves on. See this price pattern, it moves on. Okay, so this is an uptrend. This is an uptrend. Okay, so there are three type of trends: uptrend, downtrend, and sideways trend. So rationale of technical analysis is that we try to position ourselves somewhere in this price trend. Say for example, we position ourselves here. Somewhere here. Okay, and then this price moves on. So when this price moves to 11,131, we make a profit and we book out here. This is what technical analysis is all about. So very simple thing, very simple definition of technical analysis. We try to analyze the trend, position ourselves in the trend in such a way that when prices move in that trend, we benefit and we book out. Simple, crisp definition of technical analysis. So all the technical analysts or who analyze the price patterns or the charts, they try to analyze that what is the trend going to be, and they position themselves in the trend. When the trend resumes or happens, they benefit, they book out. Okay, there are three rationale of technical analysis. Rationale means three basis for technical analysis, means three parameters on which technical analysis is based. First one is that market action discounts everything. Now what does it mean that market action discounts everything? That whatever prices of a stock or a security are, okay, they have all the information related to that company. If, say for example, this is a uh, Kotak Bank price chart. If this is going up, it simply means that there's something good happening in the company, and that good happening in the company is basically visible in this price chart. Okay, see prices going down. Second, I would like to see one more chart, PC Jewelers. Now see this. This was a 600 rupees, started falling. Okay, and now prices have fallen. This is a downtrend. Okay, how does a downtrend is defined? Lower highs, lower lows. This is a high, this is a low, this is again a high which is lower. 600 was first high, 380 was the second high. Okay, okay, then it again makes a lower low, this one, and again lower high. This is a downtrend. Now it shows that there is something wrong happening in the company. So the rationale of technical analysis says that market action discounts everything. So this is market action. Prices have come down from 600 to 280 and then down. So it clearly shows that market action discounts everything. So whatever wrong was happening in the company is depicting in the stock price. It has come to now 136 level. Similarly, go to some other stock, TCS. See this. Okay, this is a high, this is a low, this is again a high, relatively lower high, then lower low, again higher high, higher high, higher high, higher low, higher high, higher low. So what is this? This is an uptrend. So there was something good happening in the company which is discounted in the stock price. Again, the second ration of technical analysis says that prices move in trends. So there are trends. See this trend. This is an uptrend. Okay, the prices are making a higher high, higher low, again higher high, higher low. So it is in a long-term uptrend. So prices either move in an uptrend or in a downtrend. See this chart of a Karangi. This is a downtrend. Okay, prices are moving in a downtrend. Okay, 515, again lower high, again a lower high. So whenever prices are in a downtrend, they make lower highs and lower lows. Okay, and whenever prices in an uptrend, see this chart, they are making higher highs and higher lows. Okay, higher highs and higher lows. Now there's one more important caveat of technical analysis, which says that history repeats itself. Now what does it mean by history repeats itself? One of my friends asked me a question few days back, that why do price patterns form on price charts? Price patterns form on price chart just because history repeats itself. Now what do you mean by history repeats itself? The behavior of bulls and bears, they repeat their behavior for a given situation. For example, for a given situation, if say for example quarterly result is really good, then bulls will come back and buy from certain support levels. If say for example a quarterly result is bad, the bears will try to sell the stock from a definite resistance level. So this behavior is continuous. They continuously behave similarly in the same stock. Just try to analyze this. I'm trying to analyze this thing for you here, that how does history repeats itself. Just see this. This is a horizontal trend line. Just try to analyze. This is a price somewhere 1880 level, at which whenever price comes at 1880 level, there are sellers. They sell their stock. Again, it has come to this level, they have again sold it. So this is a resistance. This particular zone of 1880 some level has worked as a resistance zone for this particular stock. So this is what is called the history repeats itself. Whenever at a certain price the stocks tries to trade at a certain price, okay, the behavior of the traders is continuous. See this price. Try to analyze this price. This is the price 750 level, 780 level at which buyers are coming. Okay, try to analyze this. However, this is forming a very good pattern which we call a double bottom pattern. During the discussion with you, I have analyzed that this is a double bottom pattern. This is one bottom, this is another bottom, and this is a breakout of double bottom pattern which has failed actually, right? So history repeats itself simply means that behavior of bulls and bears in a given situation is continuous. Okay, they try to behave similarly in similar situations and differently in different situations. Now, these are the three rationale of technical analysis. What did I say? First one was market action discounts everything, means whatever is happening in a company is discounted in the stock price of the company. Second is that prices move in trends. So there's an uptrend, there's a downtrend, there's a sideways trend. See this, this is a sideways trend. The price was at 1986, come down to 1757, again at 1881, and work, and it is continuous in this channel. If you see, there's a continuous channel in which prices are moving between 1882 to 1762. Somewhere 120 point, this price is actually moving. Okay, so this is a sideways move. So there are three type of moves: up move, uptrend, downtrend, and sideways trend. Now there are technical analysis was basically devised by Mr. Dow. Now the Dow theory has six basic tenets. I will discuss all those tenets, that what are those, and they are important in our analysis and our study of technical analysis. First one, which is basically rationale of technical analysis, that prices discount everything, averages discount everything. This is okay. So whenever we draw some average of a stock price, they discount everything. Means they depict the information about the company. So every information about the company is depicted in the averages. Now, what is an average? An average may be anything. An average can be an indicator also. See, I have put in certain indicators here. We'll discuss indicators in a different class. However, we in this particular workshop, we'll stick to price action, which I think is the most important part when we are discussing technical analysis or the stock pattern study. So averages discount everything. So all the information about the company is inherent in the stock price movement and its averages. Second tenet says that market has three trends. So I've already discussed three trends. There's an uptrend, okay, there's a downtrend, and this is a sideways trend. So three trends are there: uptrend, downtrend, and sideways trend. Now come back to the technical analysis. Basic definition: we try to position ourselves in a trend in such a way that that trend makes us profitable. This is what technical analysis is all about. This is the basic definition of technical analysis. So analysis of trend, price trend, is the only prime objective of a technical analysis study of certain stock of a company. Now these trends have three primary phases in them. What are these phases? There are three phases. The first one is a major trend. Say for example, say this. This is a monthly chart for HDFC Limited. This is the primary trend. What is the trend? This is a major trend. If you will see, then this is 2002. Now 2002 stock was 72 rupees. Currently the stock is trading at somewhere around 1850 rupees. This is 2002. The stock is in a uptrend. So the major trend is what? The major trend is an uptrend. Major trend is always considered in years. Anything, if we look at major trend of a stock, we will look at the trend of the stock for a period of 5 years plus. Okay, this is the major trend of the stock. Now if we go for, this is weekly chart. See this. This is what? We are somewhere around 2008. Now see this. This is somewhere around 2016. So since 2016, again this stock is into an uptrend. So if you will see, then this is an intermediate trend. So intermediate trend, we look at what? Few months. Okay. Say for example, you go to daily chart and see this. This is an intermediate trend. Just a sec. This is an intermediate trend. So intermediate trend, what is the intermediate trend? If you will see, Then this is January 2018. Since January 2018, this stock is into a sideways trend. So the intermediate trend is what? It's a sideways trend for SDFC Limited. If we look at last 3 months to 6 months trend, this is a sideways trend. Friends, please listen to me carefully. Whenever you trade a stock or a company, this is very important to know what is the intermediate trend of the stock. What is the 3 to 6 month period trend of the stock? Because I repeatedly say this in my Telegram group and to all my friends that whenever you are trading or you are investing, if you are trading for a multi-day basis, okay, if you're trading for a weekly basis, if you're investing for few months, few years, you must know the long term trend and the intermediate trend of the stock. Long term trend means 5 years plus trend, intermediate trend means 3 to 6 month trend. If you know the trend, if you haven't consulted your elder brother, if you are trading for few days and you do not know that what is the intermediate trend, 3 to 6 month trend, there is a higher probability that you will prepare a wrong trade setup. However intelligent you are, whether you use all sort of indicators, all sort of technical analysis concepts, price patterns, everything, you are prone to making a mistake if you do not know the intermediate trend. So you have to look at the long term trend, you have to look at the intermediate trend, then you have to look at the minor trend. What is the minor trend? It is basically for few days. Try to analyze the hourly chart. Now see, this is 23rd of May. Now see, it is again kind of, it is making higher highs, higher lows. See this, this is the high 1835, makes a low 7080, which is same as this one. Again makes a higher high 8070, which is more than 1835, makes a low which is 1820, which is higher than 1780. Okay, again makes a same level high 1870. So this is making, this is a minor trend. So minor trend is up. So you have three trends: major, intermediate, and minor trend. Now you have got a fair idea about the stock that long term trend is up, medium term trend is sideways, and short term trend, minor trend is upside. Okay. Now you are preparing a trade setup. That this is 23rd of May. Today we are at what? 9th of June. So last 15 days or a month, this stock is going up. So this is very important to know all these three trends. Then whenever you analyze a stock and you look at all these three trends, you will get a basic idea that what stock is doing actually. So what SDFC says is that if you go look at 3 to 6 month chart, the stock is sideways moving. Right? This, look at this. This is a sideways moving chart, and there are support and resistance level at up and down. This is 1880 level resistance upside. This is a support at 1750 level. So whenever you are investing, friends, please listen carefully. Whether you are trading or investing, please try to draw the long term support and resistance levels. This is very important. You will get to know the basics, that where the overhead resistance is and where the downside support is, and where the price is actually moving. Why does it happen that most of my trades which I do on an intraday basis or multi-day basis, I repeatedly say that please take a cue from at least daily charts, that how the stock price is moving. Most of the times we did do this sort of mistake, that we do not have a look at the intermediate chart uh, or the minor trend of the particular stock. Now, one more thing, that whenever we trade, we must also look at the volume, that whether volume is supportive or not. Just see one thing in this particular chart only, SDFC Limited only. This volume, this is the volume on which date? 16th of March. Okay, this particular candle. Now this volume is continuously coming down. If you will see, the volume is continuously coming down. Okay, and prices are sideways. So this gives us a view that market interest is coming down regularly. However, there are few higher candles in between which are not consistent. The volume is consistently coming down and the movement is sideways. So we must take a cue from volumes also. Volume confirms the trend. Whenever volume is coming down, it simply tells us that there's not much interest by market in that particular stock. So whenever you are trading or preparing a investment trade setup, somebody wants to invest into stock, okay? Somebody wants to trade into the stock from a multi-day or an or intraday perspective. Please have a look at these charts, at least daily chart and hourly chart, and how is it looking at? Say for example, look at the hourly chart, look at the volume. Herein, some good volume happened. After that, volume has diminished. Okay, and the price have become range bound. Okay, see this. This prices have become almost range bound here. 1870, 1820, again a high of somewhere around 1870, and then again low of 1828. So this is since this time. What is the time? January 4th of June. The prices are actually sideways, and volume is also diminished. So whenever you are trading, so please, my friends, definitely have a look at these things: the price, okay, and volume relationship. Price is sideways, volume is diminishing. Okay, I'm just analyze what I'm doing. I'm not looking at indicators. I'm not looking at FNO data. I'm not looking at Elliott waves. I'm not looking at. I'm simply analyzing the price patterns, that how's price behaving, what is the price behavior. Okay, I'm just analyzing the price behavior, that's it. Okay, so rest, whenever I prepare a trade setup, obviously I will take a cue from indicators, I'll take a cue from fusion or options data if stock is in FNO space. Okay, I'll try to look at the Elliott waves also. Okay, so I'll try to look at the candlesticks also. I'll try to do a lot of things, and then I'll decide. And this particular statement which I'm making is another tenet of Dow theory. What does it say? It says averages must confirm each other. What averages? A lot of averages. These are indicators. They must confirm each other, and the price action must confirm the trade. More than one indicator must confirm the trade. What is an indicator? Indicator can be everything. Now, we think that indicators are the mathematical formulae which are based on price and volume, like MACD, RSI, stochastics, Bollinger Bands, and all. But indicator can be anything. Indicator is your market sentiment also. Okay, indicator is your future and options data also. Indicator is also if some good or bad is happening in a company in the same sector. That is also an indicator. So a lot of indicators are there. Say for example, lately what has happened, lot of mm, auditors of companies have resigned. If you are looking at news and all, why is it happening? Whenever auditor finds that there's some wrongdoing in the company, he declines that he will not do the audit and he resigns. From where has this practice started? If you remember, in my groups I have written once that Fortis, okay, the auditor basically knew that there is something wrong happening in the company. Even then, they did not report it to appellate authority, the SEBI and all, and they resigned. So a lot of auditors lately are taking the cue from the same and they are resigning. So what is happening lately? A lot of money is going out of mid cap stocks. Why? Because there's a sentimental indicator which is hitting the stocks. So this is again an indicator. So indicator can be everything. So a lot of indicators, till when they are confirming each other. Okay, this is very important to prepare a trade setup in such a way that a lot of indicators confirm each other. It can be a mathematical indicator, it can be a sentimental indicator, it can be anything. Now it completely depends upon you as an investor, you as a trader, that what sort of indicators do you consider. Say for example, I definitely consider that what other companies in the sector are performing, what other companies in the sector are doing. So that is a good indicator for me for preparing a trade setup. Okay. So this is again a tenet of Dow theory, which says that averages must confirm each other. volume must confirm the trend, averages discount everything. And market has three trends. We have to identify all the three trends. And then last but not the least, that whenever there is a trend reversal, okay, it must give you a definite signal. See this. The prices were at 1941. Prices have declined. They have come to 1780 level. Okay. Now this is a downtrend. This is a minor downtrend. Now, if this has to reverse, then it has to give a definite signal. Now think, what is the definite signal which it has given? See carefully. The prices have come to 1780. They have again risen to 1835, came back to 1780 same level, 1780.05, 1780.40. Again they have made a new high of 1870 and new low of 1820. So this is a higher high. This is again a higher low. This is the confirmation that trend has reversed. Please, friends, listen to me carefully. This is the confirmation that trend has reversed. So, a trend is supposed to be continued till there is a clear-cut confirmation that trend has reversed. And the clear-cut confirmation that the trend has reversed says that it starts making, in this case, this was making lower highs, lower lows. Okay, it has started making higher highs, higher lows. And this has again become range bound. How do you know it has become range bound? Because next high, this high, okay, is same as 1870. This low is same as this. So this is a sideways trend. See this. See this. So if any of my friend is going to prepare a trade setup for intraday basis, he has to acknowledge this fact that currently it is in a sideways trend. Since what? Since 4th of June. So this level 18 and 24 zone and this 18 and 72 zone are good support and resistance levels for this stock. I hope that I'm sounding genuine and I'm making some relevance when I'm discussing all these things. All those friends who are new to technical analysis, and I'll request that please go through this video number of times. Okay, all those friends who know technical analysis, please understand this fact that I'm emphasizing since last 30 minutes, that please analyze uh, the price pattern or the price action in a proper way in terms of major, intermediate, and minor trends whenever you are trading. Now, your trade setup can be for any period. It can be for intraday, it can be for a hourly trade, it can be an intraday trade, it can be a multi-day trade, it can be a multi-week trade, it can be a monthly month trade, it can be for years. So the the biggest misconception which people have is that technical analysis means trading. Technical analysis doesn't mean trading. All the institutional investors who want to invest into a particular stock, they analyze the fundamentals of the stock and they decide the entry and exit points basis technical analysis only. For a longer term period, they invest for 1 year, 2 year, 5 year. Even then, they look at price charts. They do the technical analysis. They implement the technical analysis concepts to decide their entry and exit points. We will try to discuss everything during this workshop and during all the classes which we have. One more thing I would like to tell you, I will please tell me if I'm going a bit fast, if you need me to be a bit slower. I want to make sense. I want to make sure that I add some value to you. I can add certain extra classes so we can discuss for a few more hours. If there are few things which you are not comfortable with, if you want me to discuss it again, okay. What I want is that at the end of this workshop, you should be able to look at the price chart and analyze few things straight away. without looking at indicators and candlestick patterns and this and that. Simply by merely looking at the price action on the chart, you should be able to devise few things. That what this chart is talking to me, what is this chart telling me? That chart should talk to you straight away for that time period in which you want to analyze that particular chart. This is very important. Thus, in 30 minutes, we have covered two things. First is the rationale of technical analysis and your Dow theory basic tenets. I hope that everybody has understood that. Now, now, while discussing these rational and tenets, we have understood one thing, that history repeats itself. So the behavior of bulls and bears is basically repetitive. Now, how is it repetitive? Okay, and how we can analyze that? Now we are going to discuss this. Here, I would like to discuss few trade setups which I had prepared. Just try to see this. I have minimized the indicators, that is not needed actually. Now see this action. See this action. This is State Bank of India daily chart. Okay. This is March. Price is hovering somewhere around 264. Prices come down to 232 level on 26th of March. Prices again go up to 264 level on some 10th 11th of March, April. They again come down to 232 level somewhere around 26th or 25th of April. They again bounce back, okay, come down, and then they make an up move. Now see this, just by visual observation, this price, since it has come down, it has bounced back twice from same level, somewhere around 232 level. So how did I prepare this trade setup? I simply visually analyzed that this price has bounced back from 232 level. So this is a good support. What did I do? I simply drew a support line here. See this? I drew a support line here at 232 level. Now, since it has come down, bounce back from this level. This is what? 13th of March, 260 level. Came to 232, again bounce back from this level, 260 level. So this is a good resistance level. It has been supported twice from this point. So I drew a line here also, that is a resistance level. Okay, it has taken a support from 232 level twice. It has come up. So next time when this price action happens, okay, this 260 level must be a very good point, because for earlier 2 points this has behaved as a good support level. Okay, so this is particular channel between 262 and 232 in which prices are moving. Okay, ideally this particular thing is called double bottom pattern. So price have touched twice at this point, okay, came up. Now I would like to introduce you to a price pattern called ascending triangle. Now see this triangle, let me tell you honestly, this triangle I did not form when I traded this. When I was just looking at this chart few days back when I was trying to prepare some trade setup for this workshop, I just analyzed that this is a basic, this is the ascending triangle. Now how is it an ascending triangle? See this. What is an ascending triangle? Let's remove this. Okay. Let's move this also. Remove this. Now this is okay. Now what is an ascending triangle? See this. This is a channel actually. First of all, whenever we are making an ascending triangle, what we must know is that there are two, there is a horizontal line, okay, which is on the upside. This is a horizontal line which is on the upside, okay, and there is a upsloping bottom trend line. The bottom trend line must be upsloping, okay. Now see this. This is a triangle, okay. Now the horizontal, this particular trend line must be horizontal, okay. This is a bit tilted, no issues, and the this trend line must be horizontal. So this is the breakout of the price pattern. So we have to look at the breakout of this particular price pattern, okay. Now few things I would like to discuss about ascending triangle, that how does it function actually, what are the 6 basic identification characteristics of an ascending triangle. See this chart. This is a trade setup in Hexaware which I had actually traded. First one, this is a horizontal trend line, okay. This is a horizontal trend line and this is an upsloping trend line. So prices behave in such a way that they travel between a horizontal trend line and an upsloping trend line. So we have to, what is important is that they should at least meet twice on this horizontal trend line and at least meet twice on this upsloping trend line. Whenever you are preparing a, whenever you are looking at a price chart and you visually analyze a horizontal, you visually analyze an ascending triangle, what you need to understand is that prices are taking resistance from some particular point. Just analyze that particular line. Say for example, analyze this particular line. What is this line? This is a horizontal line. Prices have once come at 394 level, bounce back, again came to 390 level, bounce back. Okay. Now I'll give you the basic story about this behavior of stock prices. But the important point is that in an ascending triangle or any triangle for that matter, I'll discuss 3 type of triangles: ascending, descending, and symmetrical. So in an ascending triangle, prices must bounce from a particular price level, okay, twice or thrice or number of times. As many times prices bounce back from a particular level, it is best. This particular triangle which has formed must be completely filled with price action. The lesser it is filled with price action, the lesser is the probability of the stock of that pattern to perform well, okay. So once it has met at the prices have come to 394, bounced back to 324 level, again went up to 394 levels, bounced back to 359 levels, and they have broken out of this triangle on the upside. So twice it has touched the upsloping bottom trend line, and twice it has touched the horizontal top trend line. Okay, so this becomes an ascending triangle. Now, what is the rationale for this ascending triangle, or what is the story for this ascending triangle? I'll repeat. 2-3 days back, I repeated this thing in my Telegram channel also. That what is the rationale for? Say, for example, there is some of the fund manager of a mutual fund company which is invested into hexaware at some level. Say, for example, at this level, since 2007 at 241 level. Now, he thinks that the intrinsic value of the stock at this point of time is somewhere around 360 level. See, this is a price which is a good support level. Okay, 367 level or 68 level or something. Okay, so he thinks that this is a good support, and prices first rise up to 360 level, try to breach it, come below 360, and hovering around 360 level only. 360 to 400 level. So he thinks that what time has come and I should sell this stock. So he goes to his treasury and says that please sell this stock at somewhere around 394 levels. Okay, to see this. Prices come to 394, the treasury sells it. Okay, now since it sells it, prices come down due to supply going up, prices come down. Now there are some buyers who think that boss stock is adequately priced at 360 levels to 300 to 360 levels to 400 levels. They buy it. Okay, see this big candle, they buy it. Again prices fall back. Since this institution is selling, so there are certain other institutions also which think that some good fund manager is selling, so I should also sell. So they again sell. The prices again come down. Look at these two red candles, prices come down. Now there are some buyers who think that stock is now cheap, it is well below its intrinsic value, so please buy it. So they buy it. Then this price starts going up again up to 390 level, 94 level. As soon as it reaches the, but that particular asset management company again says, the treasury department says I have to sell it. They again sell the share. Say for example they have 10 lakh shares, they sold some 3-4 lakh shares here or here, and then they again sold at this level 394. Every time this comes at 394, they sell it. So it has again come down. Again some good buyers buy it. Now two things can happen. First is that new buyers look at this particular level 360 level, which is behaving as a very good support. What does it say? It at this point of time, maybe 360 is the intrinsic value of those stock, or around this is the intrinsic value of those stock. So as soon as this happens, suddenly the volume goes up. There's a buying which comes up, and there's a breakout of this level, 394 level. So all the investors, all me, you, and everybody who was observing this particular ascending triangle, what he did was he immediately took a position. As soon as this breakout happened, he immediately took a position in the stock. Okay. Now, while analyzing stock, this ascending triangle, we must note a few things. First is that the price must touch this horizontal trend line twice, and this upsloping bottom trend line twice, minimum twice. It has touched what? Once, twice, thrice, right? 4 times, 5 times on the downside, and 2 times on the upside. It is good. It should have at least touched twice on the horizontal side and twice on the upsloping bottom trend line. What mistake we do is that whenever we analyze an ascending triangle, or any triangle for that matter, an ascending triangle or a symmetric triangle, okay, or a descending triangle, we just forget this particular rule. So please remember this rule, listen to my video time and again, that whenever you are forming an ascending triangle, just ensure that that particular horizontal trend line, and that particular bottom upsloping bottom trend line must be touched at least twice by the price action. If it is not touched at least twice, and the maximum number of time touch happens, the maximum is the probability of that particular triangle to be identified by market participants and be traded. I repeat, until and unless a price pattern is not identified by market participants, it will not be traded. The more people identify a price trend, better is the probability that that particular trend will be traded. Okay, so here there is a breakout of this particular price pattern, and prices move up. Now, what should be the behavior of the volumes? Just analyze the behavior of the volume. Here, as soon as the pattern is formed, the volume is high. Okay, and then volume diminishes. Okay, see this. As the triangle is formed, volume is diminishing. Volume has come down. Okay, and then as soon as the breakout is happening, the volume has suddenly become more than average of last few months in which this pattern has formed. So as soon as the breakout happens, the volume should go up. Okay, please listen to me carefully. As soon as breakout happens, the volume should go up. It is an indication that fresh buyers have come in. Okay, whenever there's an upside breakout, there are two types of breakouts. This triangle can have a downside breakout also. This triangle can have upside breakout also. There's a 50-50% chance. I repeat, whenever there's an ascending triangle, this is a very good price pattern to trade. That's why I've discussed this first in my class. Very nice and easy to identify. Whenever there's an upside breakout, the volume goes up. Whenever there's a downside breakout, the volume might not go up. Okay, when there's a downside breakout, volume might not go up. Okay, again, if you want to identify an ascending triangle, you must see that the price touches the horizontal trend line at least twice and the upsloping bottom trend line at least twice, and this particular space must look filled. It should not happen that prices are traveling on some of the horizontal trend line or some of the upsloping bottom trend line. It should not happen. Okay, third is that most important thing, in any of the triangle, let it be an ascending triangle, let it be a descending triangle, let it be a horizontal symmetrical triangle, these are two trend lines. This is one trend line, this is another trend line. So if we stress this trend line, these trend lines should act as active support and resistance levels. Now see this, after this breakout has happened, prices have moved up to 458 level, prices have fallen to 382 level, bounce back. This particular trend line has acted as some support. See this, at this level, at this level, at both these levels, prices have acted. This particular trend line has acted as a very good support for the prices. So if you are trading, I will show you a lot of examples. I have taken out a lot of examples which I have traded, which I have not traded. So just analyze that. Say for example, you analyze an any of triangle, either ascending, descending, or symmetrical on any of the price chart. Just try to stress these trend lines and see, you will find that most of the times these trend lines have behaved as an active support or an active resistance level. See this, prices have broken out, they have came down, they have again moved up, but this trend line has acted as an active support. When this price has broken down, this has acted as an active resistance line. So for a longer period of time, this has acted as a support trend line. When this breakout has happened, this has behaved as an active resistance trend line. So for example, you are now, some of you are making a multi-day trade setup or an intraday trade setup. This particular information will help you. Okay, now see this. This is again a ascending triangle. Okay, see this. The prices have reached this point, point A. They have come down to this point. Okay, 1,000 rupees. Okay, from 1,070. Taken a support from this trend line, upsloping bottom trend line. Bounce back, again taken a support at 1,016 from this bottom trend line. Bounce back, faced a resistance from the 1,068. Bounce came down, taken a support from 1,035. Okay, bounce back and broken out of it. Okay, broken out of this particular price pattern. Now these lines have behaved as a support and resistance. See this particular line has behaved as support at many levels. At this level, okay, at this level 1,063, at this level 1,064. So for example, if you're trading, if you're an investor, okay, and February you could identify this ascending triangle forming, okay, and then it is moving up, then every time it touches this trend line, you could have bought. Okay, if you are a long-term investor and you want to look at a point where you can buy for a longer period of time, if there was a long-term investor and he had bought at 1,063 level on this 16th of April, current price is what, 1,167. So he would have made a profit of 100 rupees, somewhere around 10% profit or 8-9% profit you could have easily made. Okay, so please, I again repeat what I have said. Whenever you are analyzing any of a triangle, you need to see that the price of the security must touch the uptrend line and the downtrend line minimum twice. The maximum number of times it touches the uptrend line and the downtrend line, it is always better. The triangle should be filled with the price action. The more it is filled with the price action, the better is the probability for that particular triangle to be successful. Okay, this is important. Now these trend lines behave as long-term support and resistance trend lines. So whenever you identify some triangle pattern on any of the price charts of any of the stock, please trace these trend lines and try to identify the support and the resistances. Now see, price action is happening between this line and this line. This line is acting as a long-term resistance. This line is acting as a long-term support. Okay. Now see this chart. Again, this is a tech Mahindra trade. This is what the price is hovering around 631, 651. Okay. It has come to 560 level, again bounce back to 630 level, came back to 6.7, again bounced back to 650 level and taken a downside breakdown. Okay, it has broken down on the downside. Okay, now see, it has broken down on the downside. Okay, on what, 19th of March. However, the volume is not supportive. Okay, so on the downside breakout, this is not important that volume should be high. If it is high or not, it doesn't matter. Okay, however, there's a 50-50% probability of an ascending triangle to either break on the upside or on the downside. So whenever there's an ascending triangle forming, okay, it can be a 50% probability of upside breakout, 50% probability of downside breakout. But please, uh, please listen to me carefully. Okay, whenever you are trading an ascending triangle, One thing is very important. Please look at the prior trend. Please look at the prior trend. If prior trend is upside, say for example, these prices are going up, they form an ascending triangle, and there's a downside breakout. There's a downside breakout. Do not trade it. I repeat, please follow the prior trend. If prior trend is upside and there is an upside breakout, trade it. Okay. If there's a prior trend is upside and there's a downside breakout, do not trade it. Similarly, if prior trend is downside, okay, prior trend is downside. I'll try to look at few examples. No issue. If prior trend is downside and then there's a downside breakout, please trade it. What do I mean to say is that always trade in the direction of the previous trend. Always trade in the direction of the previous trend. Do not trade in opposite direction. Okay. Whenever there's an uptrend and there is a upside breakout, trade it. If there's an uptrend, there's a downside breakout, avoid trading it. If there's a downside, the previous trend is downtrend and there's an upside breakout, do not trade it. If previous trend is downtrend and there's a downside breakout, you should trade it. Okay, so do not go against the trend. This is very important when you are trading an ascending triangle. We will discuss the same rule, that how, uh, how valid this particular caveat is when we are trading the symmetrical triangle and the descending triangles. That we'll discuss later. But currently in the ascending triangle, always trade with the trend. Do not trade against the trend. Okay. And please remember, whenever you are trading the breakout of an ascending triangle, either on the upside or on the downside, please remember that these breakouts do value the support and resistance levels. Well, I think we should take 5 minutes break. So, okay. So it is five. We'll come back at 5:05. Okay. We'll resume our class at 5:05. I'll request everyone that post we join at 5:05. Please ask questions. I'll try to answer your questions. Okay. If you have any kind of doubt, if you want to look at a particular stock where I can try to find certain pattern, I'll definitely try to help you with that. Right. Thank you. Hi guys, I hope that we have taken the necessary break. I'll really appreciate if you ask questions and you ask me if there is any doubt so far which you have discussed in last 1 hour. My endeavor is to ensure that you learn out of this class as much as possible. Whatever I know and I practice, because whatever I know I practice. This is nothing bookish in it. So I try to learn out of my trade setups only. I try to discuss all the trade setups which I prepare. Okay, this is important to ask questions. Please ask me questions if you have any, which have all the concepts, all the things which I have discussed so far. I'll try to answer your queries. Okay, so you have discussed few basic things. Okay, Amar has asked a very good question. So how do we identify the triangle formation through naked eyes or any screeners? Okay, see, first of all, what I have discussed is that you need to analyze the price action through naked eyes first. Now, how can you do that? Just try to see one thing. Uh, if you look at the rationale of an ascending triangle, okay, what is the rationale? That prices bounce back from a certain point, okay, because there is selling which happens at certain point. Somebody is selling whenever price reaches certain point. So, whenever you are looking at a stock, just try to analyze that what is the point which is acting as a long term resistance level. If you are able to analyze that visually, then you will be able to draw a triangle, an ascending triangle or a descending triangle. Yes, it needs practice. At times your mind doesn't support your eyes, or there's a miscommunication between your eyes and your mind and you miss that. However, this is possible 1 out of 10 times, but most of the times, if you will understand this particular rationale of an ascending triangle, you will be able to identify that ascending triangle or a descending triangle or any kind of triangle on on any of the stock charts. Okay, for example, you give me some stock, I will try to identify if there's any kind of triangle formation on that particular stock or not. Please give me some stock. Anyone? Okay, Ashok Leland. Great. Let me see. Oh, a lot of chart is already there with me. I will delete everything so that these are my studies which I have put there. So I'll remove everything and try to analyze. Just a second. I'm removing everything. Okay, I'm removing the supports and resistance levels also. Okay, see this. This is 150 level. Okay, this particular stock is trying to take support from 150 level. Okay, it has come up to 151 level, bounced back to 138, again gone up to the same level, somewhere around 150 level, again bounced back. So I'm using trading view software, so it helps me draw the lines. I'm trying to draw the lines. Now you tell me whether these lines are right or wrong. See this. Okay, this is just a example. What I did, I looked at the delete it. What did I look at? I looked at 151 level. This is what 150 level, somewhere around the same level. Here somebody sold it. Okay, it came down to 138 level, again bounced back to 150 level. Okay, and came down to 143 level, bounced back to 150 level and broken out. Okay, right? See this. I have visualized it through naked eyes. You can also. This is very easy. At 150 level, around this level, somebody is selling. Okay, so what did I do? I drew the lines from 150 to 131. First touch of upside line, second touch of upside line, and third touch of downside line. So how many touches are there? First line on the horizontal line, second on the upsloping down line, bottom line, third touch on the horizontal line, fourth touch on again upsloping bottom trend line, and fifth touch somewhere around, and then again sixth touch and breakout. Okay, right? Any is everybody able to understand that? What did I do? I repeat. Okay, please ask questions if anybody could not understand it. Just remember the rationale. That what was the rationale for? What was the rationale for a ascending triangle? That somebody is selling the stock at a particular price. Every time stock reaches a particular price, there are sellers. Okay, and then what did I discuss? It is very important that this particular price must touch this almost horizontal trend line and this bottom trend line at least twice. So it has touched once here, again here. So 4 touches. Okay, and this is fifth touch and breakout. Okay, right? Getting my point? So any stock you can analyze. Whenever you are analyzing any of the stock, you just need to see that what is the price at which sellers are coming in. And if you can see that prices have come down, bounced back, again came down, this might form an ascending triangle. If you are able to do this, then you have done it actually. Okay, you have started analyzing price patterns, and congratulations to you. You just need to understand the rationale that this 151 level is working as a resistance level. See this, at 151 level, sellers are coming in. See this. Okay, are you able to analyze this? That at 151 level, this is support, this is resistance. Prices come to 150 level, sellers come in, go to 138 level, come again there's a breakout, and when there's a breakout, this behaves as a support line. So all those who are new to technical analysis, I'm really sorry, yaar, I just forgot to discuss a concept of your support and resistance. Okay, and principle of polarity. The principle of polarity says that whenever there is a support resistance line and the prices go above that resistance line, that line becomes a support line. Okay, am I not audible? Once again, a voice check. Am I audible? Hello, am I audible to all? Okay. Amar, please check your system once again. Okay. Amar, please check and come back to me fast. We'll wait for 2 minutes for Amar to come back. Yeah, am I audible now? Am I audible to all? Okay, let's resume. So this is a, just now see Amar, everybody. This is a, visibly we have observed that this is a resistance. Okay, this 151 is a resistance. The prices are traveling up to 151, broken out. Okay, this has worked as a support, twice bounced back, again came down, and now 115 is working as a resistance. So whenever we are preparing a trade setup, okay, you know one thing by mere analyzing, visually analyzing through your naked eyes, that 151 is a resistance level. and we have formed a triangle also, an ascending triangle also out of it. Okay, so this was just by mere visual, just by merely looking at the price chart. Okay, now give me some other example where I can tell you, then I'll give you some very good examples, the real time examples where you can do some trades. Any other example you'd like to discuss? Anybody? Any example? Okay, no issues. Then, okay, PNB. Okay, great. Punjab National Bank. Right. Okay, see this. This is in a downtrend. This is in a continuous downtrend. Now, let us try to analyze. This is a level, okay, at which there is consistent. This might be the level, okay. This is 1.6 is the level which has worked as where just by, yeah, Motherson Sumi also we are seeing, right. Just a sec. This is a level at which we have seen that prices have taken a resistance from these levels. So if we try to prepare a to see if there's any kind of, see this, okay, I somehow managed to get a ascending triangle out of it. This is a breakout of ascending triangle. This is a downside breakout of ascending triangle. And why one should trade it? Please go back to my earlier discussion. This is a downtrend, and this is a downside breakout of an ascending triangle. So we have a good trade setup at our hand. We can definitely trade it because this is previous downtrend, breakout, downside breakout of an ascending triangle. So this is a good trade setup. Somebody who would have traded this would have earned decent money because this was trade at 98 rupees, gone down to 74 rupees. Now, how did I prepare it? Is there another triangle at 132 level Ashok Leland? Let me see. Let me see, Sarath. We'll just see it. Okay. So first understand this. What did I do? What did I do? I simply formed a line. Okay. A resistance line, and tried to use that resistance line. Need not to use the trading view software. Simple draw lines. Simply observe. Please look at the chart carefully, everyone. This is a resistance line 132. Price has once touched at this resistance line at this point on 27th of Feb. It has come down to 91 level, made a lower low, on which 12th of March again bounced back and went to 106. Again the same level. When did it go? 4th of 10th of April. So it has come down, made a lower low, again gone back to that level, and again came down. Okay, it means it is traveling between one straight line and one upsloping trend line. There should be some upsloping trend line because see, prices are going up. After 91, the prices are gone up to this level, 93, 94. So by mere visual observation, you can see that there is a kind of upsloping trend line. See this. Just a sec. There can be an upsloping trend line. Sort of this. See this. This is an upsloping trend line. So if we just make an upsloping trend line like this, we will be able to see that there is a, see this. This is an upsloping trend line. So it shows that it is, I have not done any this thing. Okay. So current price is breaking 91 level. No, Amar. Currently, we need to analyze if there is any kind of price. Again, see this. This is again working. You are right, maybe. Let me see. And if I can draw this, just a sec. Hold on. This is a horizontal line. You have rightly identified. This is again working as a resistance. Okay. And if I want to draw this from here, I can do this. Okay. So this is again kind of This is again kind of ascending triangle forming. So congratulations, Amar, you have identified it correctly. There might be an upside breakout. Now, just hold your horses. Just hold your horses. There are few more things to ascending triangle about breakouts. Okay, I will discuss that, Abhi. I'll discuss that. It is just we cannot trade like this. There are few things we have understood. Two things about one important thing about ascending triangle is that we have to trade in the direction of previous trend. Okay, so if there's an upside breakout, Amar, we should ideally avoid trading it, because what is happening, this is a downtrend. Stock is in downtrend, it has not yet resumed the uptrend. Okay, so we should save ourselves from trading against the trend. Do not trade against the trend. Always try to trade the breakout in the direction of the previous trend. This is golden rule for trading any kind of chart, any kind of triangle patterns. Okay, so here try to avoid this trade setup, which is a breakout on the upside. Oh, however, there are a lot of caveats to it. We'll discuss that. Now, somebody discussed about Motherson Sumi and your Ashok Leland at 132 level. So let's go back to Ashok Leland first. Okay, this is at 151 level. Now the stock is at 145 level. Okay, 132 level. Okay, just a sec. Now see this. Uh, the this you have identified correctly, Sarath. This is again by visual observation. We can see that 132 level is somewhere around a downside support. Now see this. Since this is a downside support, I'm trying to prepare some. Just a sec. Is it a triangle or what? This can be a triangle. But then this is what? This is a descending triangle. This is not an ascending triangle. So congratulations, Sarath. You have identified the right thing. If you have to make a descending triangle, you have to just do inverse of what you are doing with an ascending triangle. You have to just analyze the support level. In ascending triangle, we identified the resistance level. In identifying a descending triangle, we analyze the support level. Okay, am I understood? Everybody, am I understood? Because great. See, whenever by naked eyes, if you can analyze a support and a resistance level and try to gauge the price action around that support level, you will be able to draw a descending triangle. Now now let me tell you, whatever discussion I'm having regarding ascending triangle, all the things we will all the points we will discuss about descending and symmetrical triangle, and this will be a cakewalk. Guys, this will be a cakewalk. Let me tell you, this is very easy. You will be great into price patterns. Let me tell you, after this workshop, you can by naked eyes analyze that what is the price pattern which is forming on a on a chart, and then your trade setup will be much more convincing. So congratulations to Sarath, congratulations to everybody who analyzed this. Okay, just simple analyzing. Look at Motherson Sumi. Oh, sorry. Yeah, Motherson Sumi. Let me see if we are recording. Yes, we are recording. Okay, so Motherson Sumi, now analyze this. Guys, tell me where is the support and resistance. Anybody, just fast, just tell me where is the support and resistance just by analyzing the chart. Anybody, please, fast. 300. Okay, great. Yes, Amar, 300. We have a good, yes, we have a good support level at 300 level, somewhere around 300 level. Okay. Now, where's the upside resistance? Anybody? Any upside resistance where we could find an upside resistance? This might be the level by visually analyzing that this might be the level. Okay. Or it has touched, not lately touched this level, and we have to analyze the current trend. This might be the level. This might be the level. Just try to analyze this thing. See this. If we I'm just trying to know. No, this has not been a very good this thing. I could not draw it. Okay, let's see. It has not touched. Why is it not forming? Because it has not touched more than once. That is why it's not forming. See this. But I need to ensure that it touches at least twice. So see this. It has touched twice on this line. That is why I was able to form it. On the upside, on this line at 360 level, it has not touched. My voice is broken. Am I audible? Oh, I think connection has been broken. Am I audible? Guys, am I audible? Am I audible? Yeah, okay, great. I'm sorry, I think that I was disconnected. Okay, no issues. The system helped us actually. Okay, great. So we resume. Okay, what we are discussing? See, uh, this support line, this resistance line, this 360 was a resistance line. However, lately we have touched only once, wherein at the support line 300 line we have touched twice. So that is why you are able to make a descending triangle out of it. Okay, at 2 points, and then it's this particular down sloping line, it has touched multiple number of times. But there is one caveat, boss. Just listen to me carefully. This might not be a very good trade to. This might not be a very good uh, triangle to trade. Why? It is just because, see, these prices are traveling at this particular downward trend line. So this there is a huge gap, and one condition which I vehemently discussed about triangles is that there should be minimal area which is unfilled. There should be a lot of activity in that particular triangle. If there is lesser activity, that might not be a very good signal for a triangle. Okay, so more, if you will see the other triangles which I have formed, there were not much vacant area. There was not much area unfilled. So whenever we will be discussing any of the triangles, let it be ascending, descending, symmetrical, okay, there should be a lot of filled up area in that particular triangle. If there's gap, then you can doubt that whether that triangle will be helpful for you or not. Be very careful. Be very careful while trading a triangle which is not completely filled. Okay. So somebody asked Madarsan Sumi. I hope I have answered that. Okay. Anybody else who wants to ask about any stock, or we should go ahead with this? I have to discuss few more things which are very important about triangles. Should I go ahead, or any stocks somebody wants to discuss? Great, guys. Okay, so now I'll tell you very good one now hidden fact which I didn't discuss. Why did I start with a triangle actually? Right? I asked myself also this question when I started off. Why? Now I'm telling you something which will enthuse you also. Whenever you are, whenever when you will know that how to trade a triangle, Okay, you will know three things automatically. You will know that how to trade a head and shoulders top. You will know how to trade a three rising values price pattern. You will know how to trade a triple tops. This will come automatically to you. So there's a free gift actually which comes with trading triangles, that whenever you practice analyzing a spotting a triangle on a price formation of a stock, you automatically get to see the head and shoulder formation, the triple tops, and the three rising valleys formation, which are very important. So by practicing formation of a triangle, okay, you will get to know 4 or 5 good patterns, that how to analyze them, how to trade them. Okay, now uh, again, few things which are very important. Whenever you are looking at a breakout, just try to again just try to look at overhead support, overhead resistance, or downside support. Okay, prices might bounce back from that level. Just try to analyze few stocks which we discussed once again. Say I'm randomly going to any of the stock, okay, which has actually done some kind of formation, is some formation which has happened. See this. Now try to analyze that this is the level, just a sec, this is the level which might be the resistance on the upside. Okay, just by merely looking at the price chart, I can analyze that this is a kind of resistance. Now this downside breakout has happened. Okay, this downside breakout has happened. First thing, nobody should trade this downside breakout. Why? Because there's a previous trend is upside. So if there's a downside breakout, try to avoid that. Second, as soon as there's a breakout of this particular resistance line, there might be a trade setup. So whenever you are trading any of the triangles, first of all, carefully visually observe the trend lines, resistances, and trend line supports. Okay, see one more thing, just by visually you can also do it. See this. This is a downside support. This triangle has a downside breakout. This downside support is working fantabulously well. Okay, at around what level? 602 odd levels. See this. Just a sec. See this level. See this level. This 604 level somewhere, around 604, there is a support. This was a triangle. We were analyzing the triangle. Some triangle is forming. Suddenly, there was a downside breakout, but we knew that there is a downside support, there is an upside resistance. 638 and 604 is the resistance. Now, this price is not breaking this 604. So we should have, if we had traded this, first of all, we shouldn't have traded this. Second, had we traded this, we should have seen this downside support, that this is a support, boss. This might not go beyond below this. Okay, so whenever you are trading any triangle, just listen to me carefully, write it down. First of all, whenever you are forming any triangle pattern on any of the price charts, just try to draw the overhead resistance and downside support levels, because prices might take a support from that level. Prices might face resistance at that level. Okay, so this thing we have learned. Okay, just remember this thing whenever you are trading any kind of triangles, and see this is happening. Look at any other example, say for example Ashok Leland, which we discussed lately. Now discuss that. See that. Just a sec. Is it happening or not? Have you made some kind of triangle pattern on this? Okay, try to make one. Okay, should work. No, it should not work. Leave it. Okay, any other? Just a sec. Say hexaware, which we discussed last. I want to make some point, and that's why I'm just looking at some chart which is ready with me. Now see this. This is previous uptrend. Now it has formed a ascending triangle. Now see this. Just by mere visualization, we can see that this is the resistance line. This is a resistance line. See this. This is a resistance line, kind of resistance zone. Now prices have broken this resistance zone. Okay. Now this zone should work as a support level also. This is working as a support level also. Okay. And now since it has made an all-time high, it has made an all-time high. So support level should be important. Whenever prices, say for example, somebody has missed the bus, then whenever prices come down to this level, we do have a trade setup in our hand and we can buy at this level. Caveat, please listen to me carefully. We do not buy basis this price pattern only. I'm just discussing price pattern in this workshop. That's why I'm discussing to buy this. Do not trade. We have learned in Dow theory that averages should confirm each other. A lot of averages should confirm each other. So there should be a lot of other rationale for this trade setup also. Okay, we should look at indicators. We should look at different. Which we should look at indicators. We should look at candlestick patterns. Okay, to trade. So this is just a basis for your trade. The bias for a trade will come from other indicators. Am I understood? Am I correct in this? So okay. So please understand that whenever there's a this is basically a support line. Whenever there is a breakout, just take a confirmation from other indicators, and if there is a trade setup, you can buy it also. Okay, for an upside. However, see again now just by mere visualization, what do we see? That this is 458 level is again an upside resistance. This is again an upside resistance. So maybe we have another ascending triangle at our hands. Is it? Just if we can do some kind of analysis and try to analyze. Yes, we have. We have another ascending triangle which is forming. Okay. Now this is again there is a downside breakout. This is a downside breakout. Now go back to the caveat which I discussed. Never trade any downside breakout in an upside trend. So we might not trade this. Why? See this. This was a breakdown on the lower side. Buying came. Stock is again going back in the triangle. So those who have traded this will suffer the loss. Okay. So this has again proved our caveat that never trade a downside breakout of any of the triangle if the previous trend is not supportive of that. Okay. However, since this is a support line, so when this price was falling, you could have looked at other indicators as a confirmation to buy at these levels. Okay. Am I understood? Am I making sense? Guys, am I making sense? If I'm not making sense and any one of you has any questions, you feel free to ask me. Please refer to this video. I'll share this video. Okay. If you do not understand the video also, please talk to me, call me, message me. Okay. Just connect to me. You will always remain alumni of this particular program. So I will be of help. I will be of help for you throughout at any point of time in any of the trade setups. Right. So this is again a breakout. So few things which we have learned, we have to look at now. This particular resistance line, which line? This particular resistance line. Just a sec. This particular resistance line at 458 will act as a long-term resistance. Then prices do not break this. If prices break this, will we have a trade setup in our hand? Yes or no? Guys, if prices break this 458 level, will we have a trade setup in our hand? Yes, we will have a trade setup in hand. Why? Because the previous trend is supportive of this particular breakout. Okay, right? So now understand few more things. The one problem with triangles is that there are a lot of false breakouts which happen. Say there will be a breakout and prices will again come down in that triangle. This is very, this is one of the policies which triangles have. There will be breakout, then again prices will come back. Okay. So we have to be very cautious. We have to take confirmation from other indicators. Herein, whenever I discuss indicators, there's an asterisk. Indicator mean not only price volume indicators, but how the market is behaving. Okay. Again, understand one thing. If there's an upside breakout, okay, this is an upside breakout. What is the date? This is 2nd of April. Okay. Okay. This is 2nd of April. Now go to Nifty. We'll see Nifty at 2nd of April. Yeah, how Nifty behaved at 2nd of April. Let's see that. This is March. This is April. This is 2nd of 10th of April. This is 2nd of April. See this. See this. This is 2nd of April. Guys, see this. Nifty is going up. Okay, consistently. Okay, and now come back to our stock. Hexaware. Okay, see this. This is 2nd of April. Again, this is 4th of April. Now see Nifty on 4th of April. This is 4th of April. See, what are you analyzing? What are you analyzing? Nifty is coming down and our breakout is also failing. Are you getting it? See Nifty. Nifty is coming down and our breakout is also failing. Okay. Again, Nifty bounce back. Nifty bounce back and our breakout also was successful. So what do you derive out of this? You derive very good point. I'm writing it. Never buck the trend of index. Whenever there is a breakout, on upside or downside, never trade against index, right? In case there is a breakout on the upside and Nifty is going down, forget this trade, boss. Forget the trade. Do not trade it. Am I making sense? Guys, am I making sense? Never trade the breakout on the upside or breakout on the downside if your Nifty doesn't support it. Okay, right? So this is one point which is very important. If, say, for example, Nifty's trend reverses and you have an upside breakout, try to be doubly sure in trading that particular breakout. If Nifty is coming down and there is a breakdown, means your trade is being supported by index, trade it. If your trade is not supported by index, avoid it. Okay, so there's a huge probability. Guys, am I making sense? You want me to repeat this particular point? Anybody? Am I making sense? Understood? Yes. Just answer yes if you have understood this. Thank you. Thank you. I hope that everybody understood that. Great. Great. Guys, if whenever you are looking at the breakout or the breakdown, just take the cue from Nifty or Nifty IT or the index in the indices that are they supporting your breakout? If they are not supportive, immediately get out. Forget that trade setup. That will bound to fail because stocks take cue from indices. Okay, this is very important part. Again, repeating at the cost of repeating myself. Okay, so now most of the times there will be false breakout, that there will be breakout, premature breakout. Most of the time the breakout happens somewhere. If you calculate the distance of this A point to this head, what is the point? This is 394. Okay, these two, the distance between A point and this point, somewhere around 65 to 75% level, this breakout will happen. Okay, just analyze. This is not a This is not a fixed rule. The breakout can happen at any point of time, but breakout can happen prior to that also. Whenever breakout happens prior to this 65 or 75% of this distance, okay, or this distance, this particular distance, this is called a premature breakout. Premature breakouts do happen. They are very common in triangles. They happen, but they fail also. So be very careful. And how to be sure that this setup is going to work, that the maximum of that particular, first of all, the trend should be supportive. Second is that maximum of that particular pattern triangle should be filled with the price pattern. Maximum touches must be, the more the touches, better it is on any of the trend lines. Okay. Second is that the breakout should be in the direction of the previous trend. Okay. Breakout should be supported by indices also. Okay. And these trend lines do behave as long-term support and trend lines, long-term support and resistances. Okay. These things are very, 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 very important. Okay. As far as volume goes, volumes in an upside breakout, in an upside breakout, okay, volumes are important. If volumes are high, see, these volumes are high. In downside breakout, volume is not that important. When, just remember one thing, that prices fall of their own weight, right? They do not need any volume to fall. Prices don't need any volume to fall. However, prices need volume to go up. This particular point, just remember in technical analysis, just remember in your analysis of prices, just in your technical analysis, that whenever prices have to go up, they need volume. When they have to come down, they don't need volume. They fall off their own weight. Prices fall off their own weight. They don't need volume. Look at Punjab National Bank. Just a sec. Look at Punjab National Bank. See, prices are falling. Okay. Now see, herein, when there are gaps, volume has gone up. Again, prices are falling, volume has dried up. Look at average volumes. Okay. See, here volume was there. Again, volume has dried up. See, again, volume has dried up. Okay. So prices usually do not need volume to fall. However, whenever they have to go up, they need a volume. Okay. Right. So coming back to our this thing, again, one more example I could see, that's why I'm sharing. This is Rain Industries. Lately has fallen. Now see, I just saw this. Okay, see, this is a previous uptrend. This is a symmetrical triangle. We'll discuss how to form a symmetrical triangle later. Not this. Abhi will get confused. Again, this is another kind of symmetrical triangle which has formed. Now see, prices are falling. The first point is not a resistance, right? Okay, just see PNB. What we're trying to tell, analyze. The first point is not a resistance. No, no, this 106 is a resistance. And again, 91 is now a resistance. See, now see this. This was a resistance. The prices have come down. This has taken a gap down. Okay. Again, now 160 is resistance. Prices have fallen. Now have gone. Now they were taking support from 91 level. Okay. But now they have come down below now 91. So 91 has become a resistance now. Because of principle of polarity, this support has become resistance now, right? And now this is again an ascending triangle which has formed. But however, we might not trade it just because the previous trend is not supportive of the trend of this trade setup, right? Until is there's not a clear cut breakout of this 90 level. Tomorrow, say for example, is a breakout of this 90 level, and your other indicators are supportive, right? And then you can trade with this 90 stop loss. You can trade it for a target of 109. Okay, getting my point? You can trade, provided that was risky trade. Okay, you need to take this 90 level as a resistance level, as a support level. You need to trade for this target, and your other indicators must be supportive of this, right? Okay, just a sec. Now, uh, okay, any stock. SBI. Now boss, all these points which I'm discussing, they are common for all the triangles. Okay, they are common for all the triangles, so you can trade it easily. See this, this is kind of descending triangle which might be forming here, I suppose. Okay, yeah, this is kind of, see this kind of descending triangle which has formed maybe at this level somewhere. Okay, so this is a breakout kind of, right? And see, there is no hard and fast rule for making a triangle. The only rule which says is that whenever you are looking at this thing, the maximum of your triangle should be filled with price action. Second, there will be minimum 2 points on the up trend line and 2 points in the downtrend line. This is the only criteria which you need to see when you are preparing any kind of triangle. Okay, I hope that this is clear to all. So see this. This is a kind of descending triangle which has formed on SBI. This is a breakout and everything. Okay. Now one point is very important. There's a what is the failure rate of the breakout? Okay, what is the failure rate of the breakout? Now there's something called 5% failure rate in a triangle breakout. Ki prices break out, okay, then they retrace back. Means they go a 5% up and then they retrace back. Say for example, this is 248 level. It went up to 257, 248 to 257. How many points? 10 points. Somewhere around 5%. See this, somewhere around 5%. Okay, see this. Okay, and again retraced from this level, went up to again 240 level. Okay, from 248 to 240 level they have bounced back. So from 257 to 240 level, somewhere around 18 points, somewhere around 9%, they have fallen somewhere around 9%. So this thing is very common in triangles. This is called 5% breakout failure. 5% means 5% they go up 5% post breakout and they come back. Okay, now why does it happen? Why does it happen? Okay, first and the foremost thing which I discussed with you, we when this breakout happened and say for example somebody traded this, did he see this resistance line? I repeat, what did I say? Whenever you trade any breakout in a triangle, you need to first look at overhead resistance and downside support lines. So somebody who traded this breakout, he should have seen this resistance line at your 256 level, your 257 level. This is it has worked previously beautifully, so it is going to work here also, might work here also, it has worked. So what is the prime reason of a price volume breakout failure? It is an upside resistance line. Okay, on the upside breakout, if there is a breakout on upside, this is upside, this is upside resistance line. If there is a breakout on the downside, there is a support line, which we discussed in some other stock. I forgot which stock we discussed. We discussed few minutes back one stock where there was a support and the downside, and it took a support from that particular line and bounced back. Okay, so failure of breakout might happen if there is an upside support line, a upside resistance line. Downside breakout might fail if there is a downside support line. Okay, second, why the breakout might fail? Again, if your indices are not supportive. Say for example there is an upside breakout. Now see this, this is 15th of May. Now try to see Nifty on this level. Let's check it. Let's check Nifty at this point. What is the 15th of May Nifty? 17, 50. See this 15th of May Nifty. Guys, are you seeing this 15th of May Nifty? What does it tell? This is a long body, a long tail of a candlestick. Means price rejection. Wonderful, wonderful, great, sir. This is price rejection at which date? 15th of May. That is why look at SBI. It has also been rejected at that level only. So somebody who was following Nifty would have seen that, boss, this is a time to sell SBI. Getting my point? Now guys, you are understanding that how to prepare a trade setup. Okay, that Nifty you are analyzing. Now see Mr. Reddy was identified this this particular uh, descending triangle in SBI. He saw this breakout happening and he saw that this is a resistance line. Suddenly on 19th, okay, on this particular date, Nifty had a rejection at this particular date, 15th of May. What did he do? He immediately had a trade set up in SBI. He saw that there's a rejection of SBI also. He could have shorted this. See, there's a tail. He could have shorted somewhere here with a stop loss at 257. Am I right? Guys, are you with me in this? See this. Now you know one thing. You had gone through this price pattern analysis workshop and knew that this is a 5% breakout. It has a higher probability of rejection at this point. Market has also rejected it. So we have a trade set up at our hand with a stop loss at 257, a short trade. Had we traded this short trade setup, we should have got a profit of some 9% or some 7-8% till this price comes to, and then again come to one thing. What is this? This is a trend line. What did I say? That this trend line will act as a support. Didn't I say this? Yes or no? So price have taken support from this trend line. So as soon as prices have come to this, we should have dissolved our short position. We should have dissolved our short position here only as soon as prices come here. Okay, because this is a long-term trend line. This is a long-term support line. See, prices are taking a support from this trend line. Okay, getting my point? Making some sense? Everybody, guys, are you making sense? Great. Thank you. Thank you. Thank you. I hope that I have added some value to have not wasted 2 hours of yours on a Saturday evening. Right. Actually, I'm trying my level best to genuinely tell you. Let me tell you, I invest some good 8-9 hours in markets every day. Today is heavy rainfall in Mumbai. Even then, I'm sitting in office taking this class just because I know that you guys are serious. That is why you have joined me. So I'll ensure that I'll put my level best to ensure that I add value to you. So I hope that I'm making sense. This is a short trade setup, provided it is supported by indicators. Now, indicators again, asterisk, it doesn't mean only price volume indicators, it means the overall market indicators. Since there was a price rejection on Nifty, when you will attend my class on candlesticks, I'll tell you that there's a sell point in Nifty. Here you need to sell Nifty. See this, Nifty sold from 10,900 level to 10,400 levels. Some good, decent 500 point move on the downside. So there was a short trade setup in Nifty also. And then similarly, since SBI was rejected from its support level, so again, there was a short sell in SBI also. So, and just remember my first video, if anybody has seen my first video, I told one thing, that if you do not know a person, you do not interact with him. You interact with a person if and only if you know that person really well. Here, we knew Mr. SBI really well. Isn't it, Mr. Reddy? Isn't it, Mr. Upadhyay? We knew SBI really well that this is making a descending triangle. Okay, right, Amar? So, and that is why it has been rejected. There was a 5% breakout which has been rejected at this 257 level. So we have a short trade in our hand, and very good risk reward ratio. Why? Because the upside resistance is 257. So what is to lose? Very less points to lose and very high points to gain. So great trade setup in our hands, provided it is supported by our indicators. Okay, guys, it is 6 p.m. Okay, we have spent 2 hours. I do not realize that we spent 2 hours. I wanted some more time to discuss. However, tomorrow I'd like to continue this. Thanks for your time. You were wonderful. Okay. Please do write to me on my email ID info@sharadmishra.in if you learned anything. If you didn't learn anything, even then write. Okay. Uh, Try to practice this. I'll try to send you video tomorrow. Okay. Chalo guys. Thank you. Thanks a lot. Take care.